we want to make this a moment in here. So every week we get to go through a different tip. Last week we talked about how a bank failure can help you in your real estate investing business, because last Tuesday when we met, it was about 3 days after the SVB bank failure. And today we're going to continue along that path, because a lot of the new discussion is how the bank failures are affecting new home builders. What do you think's happening with new home builders? Where do new home builders get their money from? Banks. What kind of banks specifically? How about local banks? How about small banks? How about regional banks? Right? So that's typically where home builders are getting their money from. So what we're finding, and this is very early, so just kind of looking into the crystal ball here, that these bank failures may disproportionately affect those new home builders who are getting all of their money typically from these regional banks, right? And they're getting these lot loans. And what are people doing? I'm curious, how many of you guys 2 weeks ago were at a regional bank, like a smaller local regional bank? Who are you? I'm just curious. Raise your hands. Want to know? Seriously, I want to know who you are. Okay, so just a couple of you guys.
Amagi Bank.
Okay, Amagi Bank. I'm curious. Did you take any of your money out of Amagi after SVB failed?
From Bank of America, though.
You took it out of Bank of America, which is the second largest bank in like the United States. Okay. Did you take any of your money out? Did you take any of your money out? Okay, so the last week when I asked that question, when we were doing this meeting last Tuesday, there was one person who's like, yeah, I ran in there, I took $5,000 out of the bank. So she was the one wearing the Bank Run 2023 shirt. So I have heard a lot of people who are moving their funds out of these smaller, more regional banks and putting them into the better capitalized, theoretically, right? So I think there's going to be a lot of kind of peeking behind the curtains after what happened with SVB and some of these other banks as well, in terms of how they're investing the money that we have on deposit with them. But a lot of these new home builders are using these local, smaller, these regional banks, right? And what I've heard is that a lot of people are pulling their money out of those local, smaller, regional banks to move over to these more capitalized banks, just because of fear, right? Now, what I feel like I'm conflicted about this. I don't know if I am thrilled that the Fed backstopped the depositors by increasing the FDIC insurance to whatever you had on deposit, right? That was a pretty wild and very quick move by Treasury Secretary Janet Yellen to basically say what? Calm down, everybody. Calm down, everybody, and don't do a run on these banks, because we're gonna be a backstop for them. Now, I think I have as a full-on capitalist, like I have some problems with that, but also I'm super thrilled because it allows me to continue to do what I do in my business, right? Because if we are all afraid that the banks are not going to be a safe haven for us, then we're going to have more mattress money than we ever had. And I kind of feel like, does anybody else feel like COVID killed cash? Does anybody else? Yeah, COVID like killed cash. But I think that the SVB failure is resuscitating. It was like just put a little defibrillator on cash and it was a bank failure, right? So I feel like that's happening. So, and I'm seeing a lot of those I've heard a lot of people are moving their monies to other banks, and even moving from the major banks as well. And as that happens, that results in less liquidity, especially for those regional banks, and these bank examiners, are going to be kind of tightening the screws a little bit as they're sitting in some of these banks' offices to make sure that they're investing the depositors' money effectively. Because I think that was really the major reason why SVB failed. They made some kind of dumb decisions in terms of their investments, put in some of these longer-term assets that they had to sell quickly and they had to take losses on. So if these smaller regional banks have less liquidity, so less money to lend, that means builders have less access to capital, and that access to capital will be constricted. So that is going to do what in terms of supply for us? It's gonna reduce it. It's gonna reduce it. So what does that mean when our supply is? How does that work for us as real estate investors? Higher rates. More supply. Less supply, right? And I don't know. I think so. If I think of So builders were already pulling back their production because as interest rates rise, they're like, okay, we've seen this before. This looks like a replay of 2008. If you look at the building permits between, for example, 2021 versus 2022, and if you look at how 2022 ended in building permits, right, the building permits dropped dramatically because the builder said, we don't want to get caught in this. And so they were already pulling back in the face of those increasing interest rates. And now, because of maybe some of these liquidity issues on some of these smaller regional banks, we could have a short-term problem or a longer-term issue. It's really hard to say at this point in terms of what that liquidity is going to look like. But what I will tell you is that less supply from the builders actually, in my opinion, helps us as real estate investors. So one of the reasons why, even though our sales have been down 30% in the last half of 2022 versus where it was in 2021, the reason why we didn't see any downward pressure on that average and median price as we finished out 2022 was for one reason and one reason only. Why? Demand dropped. But why didn't we not see demand drop by 30%? But why was price basically flat? We still weren't building anything. We still didn't have supply. And in some markets, last year, the Austin market, for example, had a 2-week supply of inventory. The historical average for months of inventory is like 6 months. If you have a 2-week supply, what's happening with price? Is going up like crazy. And in fact, in the Austin market, it was going up at 30% year over year. In most of the markets throughout Texas, it was somewhere between a 1 and 2 month supply at the beginning of 2022, all the way through about May of 2022, when some of the interest rates started to really pull buyers out of the market. But what I will tell you is from a builder standpoint, and even from so from a builder who's, kind of more of a production builder, as well as a builder who's just, building like, 10 townhomes, right, here in Houston, right? When that money starts to peel off and not show up for them when they've got a new project that they want to build, it will continue to lower inventory. So we've been in positions where we've almost doubled inventory in some markets over the last year. But we've still kept prices up because even though we've doubled inventory, it's still relatively low. So if this SVB bank failure and combined with those high interest rates takes a lot of the builders out of the market, then for those of us who are doing the rehabs, the renovation projects, the fix and flips, right? We're not competing as much with builders as we otherwise would. So from that perspective, if you were previously building and now you're in a spot where like, I'm not be able to get some of those same funds for building, but I can get those funds for just a single family fix and flip, then that might be where the market tells you to go, right? So I feel like a lot of new investors, as they're getting started, it's like, I have this strategy, I've got this plan. And it's like, my plan is this. Well, your aperture is very narrow. When your aperture is very narrow, you're not maybe listening to all of the other influences that are coming in around you that are telling you, that was a great idea 3 years ago when the market was here. But let's look at where the market is now, and let's look at where the market's going, and let's expand that. So you have to be strategically agnostic. So what that means to me is the reason why I have not had to update my resume for 20 years is because I didn't just stick to one strategy, right? So as the market goes up and down and as it changes, you have to update your strategies. You have to change your strategies. Otherwise, you're going to be that person who's just beating their head over and over again against a wall until that wall ultimately takes you out, right? So I want you guys to be strategically agnostic and look at some of the market factors that are going to impact the way, that are going to impact the success. So I would challenge you guys to be strategically agnostic. So for me, that means, we use 12 different strategies. We invest in single family, we invest in multifamily. We want, we're all real estate all the time because I live, breathe, eat, sleep, dream real estate 24/7 and have for the last 20 years. I want you guys to be around other people who have their heads so deep in this and analyzing all these different things as well to make sure that you guys get in positions to make those higher prices and those higher profits for us as real estate investors, and understand what this banking opportunity, with this banking disaster, how that can be an opportunity for us as well. So that's what I wanted to share with you as we go.